Welcome to TRADEREP. This is Short Hammer. It is the 5th of June 2019 and we're looking at the SPY. Don't adjust your screen. This is not a trick. If we look back here at October 2018, we'll see we were up around the 293.21 area before we had a nice sell-off. Dropped all the way down to 270.36, bounced, pulled back, went as high as 281.15. Then the next wave down, we went all the way to 259.85 before pulling back and again touching the 281 area. So why is that interesting? Because even the next sharp sell-off, we pulled right back up into the 280.40s, right near this 281. So this 281 was the oversupply area that we couldn't get through once we sold off and tapped the 270s. Just couldn't get back through it no matter how many times we tried before we had a sharp sell-off. Now this time, the high, I would say, would be this 294.34. We had a sell-off. We dropped as low as 279.93. Very different than the numbers here, but not a big deal. Pull back, 288. And the next wave, we went as low as 273. Then we pulled back. It says 280, but we're in the 281s, I believe, right now after hours. But I wouldn't be surprised if we went to the 282s based on us being about $1 or a point or more higher on this wave than we were on this wave. So what we want to watch for is what we do tomorrow at the open around that 281 area. Don't get too excited if you're long or you bought the dip. Just be careful. Make sure you're not too heavy in your positions because this could easily reverse sharply and repeat this pattern. Could this continue to go up? That's also possible, but you want to use history as a guide, not to say that it's going to happen again for sure, and to always assume that history will repeat itself. But even if history doesn't repeat itself, it usually rhymes. So as we're seeing this pullback up into this area, watch for any signs of weakness for us to potentially turn around and go back down. If we see continued strength in the SPY and other indices and also in the overall, in the broader market, that'll be great to really help us get through this area. We might need some sort of a news catalyst to help us push through this area. Not sure if Powell's tepid statement about being open to lowering rates is enough to get us through the 281 to 282 area, but we'll see. But I would keep it really tight and watch your positions and just trade what you see. But just remember, last time the 281s that was the oversupply area we couldn't get through. And this time, don't be surprised if it's the 282s or the oversupply area that we can't get through based on it being a higher wave. Now, if we slide to the intraday, what we were mentioning intraday, once we began to move to the upside, we get above this 277.55, 277.86 supply demand zone. Once we tag the next supply demand zone, we drew a line here, what we like to call a swing door line, where if we went below this, we'd be a little bit more bearish, but staying above, we're a little bit more bullish. So we knew once we touched here that this was a natural, healthy pullback point. We pulled right back to it, based, and then made the next leg up. Tomorrow, I'm going to be watching what we do around the 281.80s, this monthly pivot. And what we do if we continue to push up into the 282s, I'll be watching this supply demand zone. And I believe the 28.21s or 282.21s are a level that Elisa mentioned over the weekend on her stream. I'm not quite sure, but it's right in this area. So I'll be watching that to see what we get, how we open, how we react to the 282s tomorrow, and if we see a pullback to head back down. So let's just keep our eyes open and just stay nimble. Don't be whichever way that we go, whether we continue to see buying come in to try to push us above this level to the upside, or we see weakness in selling come in to push us to the downside. Just stay nimble with your positions and don't be married or cemented in any idea. The market is in flux right now, so we're not quite sure which way we're going to go. So stay nimble with your trades and watch your levels.